Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, January 21st, from a frigid, snowy South Carolina. And we're looking at window traders' market profile of the ES and NQ as the rally continues. Yesterday, ES went out, held a double distribution day. NQ did not. They did have an afternoon pullback low that held, and KM almost took it out but did not. And now we're looking at gap higher again. So again, emotional trading taking center stage. We've gapped higher 6 times already this year. In 12 trading days, in ES, 3 have held, and in NQ, 6 times also, only 2 have held. So we'll see again with 75 minutes to go if today's gaps hold. Right now, it's about $2.70 in ES, and NQ's gap right now is 142 points. So not bad. Pretty nice sizable gaps. As you can see, ES trying to take back the last set of singles from December 18th and get into the upper distribution from that day. All right. Again, they put the weekly back into balance yesterday, the 3 of these indices. The monthly is balanced and the daily is obviously up. Volume yesterday, though, another cause of concern, as it was the second lightest of the early year here in SPY at 42.5 million. Righty right now is trading inside yesterday's range. Remember, they went out with the price probe as they got the overnight low late. Overnight high late in the day, went out with a price probe. Right now they're below the base of it, but we'll see come 9:30 where they are. All right, so we game plan. Obviously, if the overnight high is anywhere right around here in ES, first time it's a decent risk reward short against a single print fill. Out above that, right? If they do get the overnight heights eventually, then on pullbacks, you're going to have to decide where you're comfortable taking along. Would it be at the previous weekly high of 0750? Do you wait until you come down to where the wide POC is overnight to give you a better risk reward against the gap fill? Again, that's something you have to determine how much heat you want to take. And that's why when the ranges are still decent, you have to play smaller and widen your stops. Okay? And Q, as far as the short, again, it depends on where the overnight high is. If we open right near it, front run it, sometimes has worked a lot. They're trying to take out the yearly high from the 6th. Okay? So, and as far as the long, if we get the overnight high, again, you're going to have to determine maybe based on where the 144 is, or other things to possibly lean on come 9:30, what you would look at. Okay? Those early plays. As far as our chart goes, so here's the daily, one time framing up for 5 days. Today they're going to attempt to make it 6 with another gap. Gaps are a form of emotional trading. Okay? Just keep that in mind. So we're going to see how much that continues. They're trying to take out the 18th high. Okay? December 18th. That's the big one. That was the big level I said. That's very important, right? Now, even though the daily is up, we talked about December 18th high being the top of the previous large balance. Well, we're getting to that. We're close to it. So you're going to have to see how the market reacts around that level, okay? Are we going to get above it easily? Are we just going to stretch it? And the same, here's triple Qs. Same thing, okay? That December 18th high, now that's still pretty far away from it. That's 536.88. We're only trading at 529 right now. So they're still a decent ways away from it. In fact, they need to take out January 6th high, obviously, to have any hope of testing the top of that old balance high. So, again, these are all things to look at. There's not just one thing to look at. Yes, we're up in the daily, but if you get close to that December 18th high in ES, I would expect some swing traders on the short side to possibly come into play. Thank you so much for liking and subscribing to this channel. Good luck trading today, and we'll recap at 4 p.m.